Hello and welcome to this week's Dave Show. As always, I'm your host, Dave. This week we're going to be talking about the Toronto housing bubble. Very exciting stuff. We're going to be talking about the delinquency rates in the US. This is crazy what's going on. And the last thing is going to be malls. Do you remember what those are? Shopping malls? But first off, we're going to wrap up last week's subject of the Keystone Pipeline. Hey everybody, welcome to the Dave Show. On this show, we talk about current events, cryptocurrency, politics, and how it affects you as a real estate investor. And if you like what you see, make sure to subscribe to the channel, hit the bell to get notified every single time I upload content. Now, let's start the show. So at the time of last week's recording, the Keystone Pipeline was not yet canceled and Joe Biden was not yet president of the US. But as of January 20th, all of that changed, and as soon as he got in, he did what he promised and he canceled the Keystone Pipeline agreement. Now, we're not very surprised. The thing I actually am surprised about it is the Canadian ambassador to the US is already saying, on the day that it happened, basically the day after, saying, get over it. That's the representation that Canada is getting, is telling the country to get over it. So that's great. That's a lot of hustle and bustle for us. The other thing too is Prime Minister Justin Trudeau says that he does not see any reason why he should fight for it as well. And if I was someone who lived in Alberta, an Albertian, I would be very upset about that. And the secondary markets that we're going to benefit from it, from oil, from our natural resource, going to the States and providing jobs, providing income for years and hopefully decades to come, I would be very upset with the fact that the Prime Minister doesn't even think that it's worth fighting for. Now, I know the Keystone Pipeline has been controversial for years. I'm not saying that there's not any side effects to it. I'm just saying that it's worth a conversation. It's worth maybe talking to Joe Biden about it. But as per the ambassador and the Prime Minister, get over it. Now let's talk about the Toronto housing bubble. This is a subject that if you're in Canada, all you ever hear about in the housing bubble is Toronto's overvalued, Vancouver's overvalued, right? And you're thinking, Dave, how is this news? How is this anything new? Well, guess what? Christian brought me a report this morning, and I'm going to pull some stats from my phone here, but he brought me a report that Toronto is actually even more in a bubble than bigger places like even in the States. Toronto is actually number one for North America. Think of that. So according to the 2020 index by the Swiss National Bank, Toronto is third in the world. The only people ahead of them are Frankfurt and Munich, okay? Now think of this. I always thought Hong Kong. Hong Kong is the most expensive place in the world to live. But their value seems to make more sense than Toronto, Frankfurt, and Munich. So not only is that something to look out for, that's something that's actually very scary for people in Toronto. So you're not just a housing bubble in Canada, you're not just a housing bubble in North America, you're actually, unfortunately, top 3 in the entire world. That's something when you can beat Hong Kong in the housing market. So what does this mean to you as a real estate investor? So if you know that Toronto's on the verge of a big bubble, what could you do? Maybe you hold off a little bit. Maybe you start looking at secondary markets around Toronto. And then when it happens, what do you do then? You pounce, right? You're that shark in the water. You're that tiger waiting in the bushes to pounce on its prey. Because when that bubble busts, you might be able to buy houses that are 80 cents on the dollar. And that's not a bad thing when you're a real estate investor. I'm always buying throughout all types of different waves in the market. However, when the market does take a dip and it recorrects, it is an opportunity for people to get into real estate and make some money. But overall, even if it does happen, and even if you're in the Toronto market, what does real estate do overall? It goes like this, but it always goes like this over time. So in 30 years from now, we'll be laughing at this if it did actually burst. Now let's move to today's second topic, delinquency rates in the US. Now first off, let's talk about what a delinquency is, quote unquote. A delinquency is typically when you're 90 days, 3 months late on a payment. And what I'm talking about is typically mortgage payments. That's what we're talking about in this delinquency list. Now from the stat that I'm pulling, the US delinquency rate is three times higher than it was in roughly October 2019. Now, what does this mean as a real estate investor? Well, if there's going to be a correction in the market, what's going to happen? If people start to have foreclosure, power sale, this could mean that people actually get kicked out of their houses. And again, if you look at last week's video, I talked about moratoriums. They can't physically be removed from their houses yet from the sheriff. However, they can have the process started on them with the lawyers and the attorneys. But what does that mean? Once they actually get removed from their houses, these people are not just going to sleep on the streets. They're probably going to go looking for apartments. As the housing delinquency rate continues to creep up, once the moratorium's gone, the eviction will start, and then I think that the rental market will actually get higher because all these people will go to apartments as opposed to just living on the streets. Now, question, are we looking at another 2008, 2009, where a lot of people lost their houses, a lot of people got evicted and kicked out, and a lot of people were scrambling to find a place? Think about it. Once that moratorium lifts and those sheriff evictions start to happen, we're looking at another 08, 09. Speculation? I don't know, but only time will tell. Scary stuff though. Delinquency rate at 3 times the rate already. Now lastly, malls. Shopping malls. You know that place where you used to go, hang out with friends all day, get some ice cream, go to the food court, maybe buy a pair of jeans and just kind of do nothing all day? Well, those places are very, very hard hit by COVID-19, obviously, as you can imagine. And I don't necessarily think they're going to come back from it. I know we have 2 malls in the city I'm in, and the one was already hurting pre-COVID because people were more and more already shopping online. And now that you're forced to stay home with these lockdowns and these restrictions where you can't leave your house, people can only shop online. And I don't necessarily see that going away. Especially I heard today, Amazon is the 2nd biggest employer in the US, and they are still on a hiring spree. So that means that online shopping is not going away. Now, what does this mean for malls? I think, and this is just my opinion, I think that malls have an amazing infrastructure and can be utilized for other things. For example, there always seem to be professionals on the 2nd floor. There would be doctors' offices, there would be dentists, a variety of different professions upstairs. Now I'm thinking of 2 different things. What if they take those professions, bring them on the main floor, and then make the upstairs residential apartments? Because more and more people need places to live, and who knows, with the last subject of people getting evicted, the mall might be a good place to make apartments. The second thing I'm thinking is, what if they do leave those professionals on the 2nd floor and they make the main floor senior living? It's main floor. They can make some nice dwellings with assisted living for the seniors. They want to keep their independence, you know, things like that, right? There's so many different ideas, but I don't think the pre-COVID quote unquote mall where all of us had teenage experiences there and had fun is going to come back. So what do you think about the malls? You think they'll come back even though they've been creeping downwards for years, even before a worldwide pandemic? Let me know below. Also, let me know what you think about the Keystone Pipeline, what you think about the Toronto housing bubble, the delinquency on the US mortgages, OMG, 3 times what they were in October 2019. I'm curious, I want to see what you're thinking. Comment below. I answer every single comment. All right, if you like what you saw in this show, make sure to subscribe to the channel, hit the bell to get notified, and even check out our last video where we talked about the Keystone Pipeline. I'm Investor Dave. That's a wrap on today's show. See you next time.